Oh, please go ahead. Yeah.
I think I didn't see Mr. Debashish Panda yet.
Yeah, good evening.
Right. Hi.
Hi, Debashish, you are looking good.
Hi, Taranjeet, how are you?
Sorry.
Hi, Mr. Bajaj, Mr. Singhal. How are you, madam?
I'm doing well, sir. Thank you.
Good to see you all.
Debashish ji, how are you?
Very well. Thank you, Bajaj sir.
Great to see you. Yeah. So
It's
with
not too often that
now,
we see a regulator that moves faster than the industry, but congratulations, a lot of great things that you're doing. We'll talk about the targets when we meet next time.
Debashish, you have a very impressive office, I must say.
It's a nice one, yeah. When you visit India next, please come to Hyderabad.
So with everyone in, we are set to start, and may I, on behalf of CII and the organizers, our co-organizer, of course, our partner, the Embassy of India in Washington, D.C., welcome all who are participating here. The ACLI and also the APCIA are also very strongly engaged in this very important session on enhancing India-U.S. collaboration in the insurance sector. Just a few words of welcome and introductions to this very nicely designed session, and a special, very warm welcome to Ambassador Taranjeet Singh Sandhu, Ambassador of India to the U.S., and also to Mr. Debashish Panda, the Chairman of the IRDAI. As we know, in this particular webinar, we have a fantastic audience. Actually, we have more than 150 participants which are registered from both the countries, from the US and from India, and many more are actually watching live on the YouTube. We have gone live already. And as in India, we are celebrating this year as the 75th year of our independence, and we call Azadi Ka Amrit Mahotsav. India stands as one of the fastest developing nations, and at CII, we are really working very closely to celebrate this phenomenal India success across various domains, and to get together with government, regulators, and industry, and achieve the vision of really making US, if I can say, what we are really looking at, a US $5 trillion economy in the next few years. And we talk about a 40 trillion by 2047. That's when India will be India at 100. And I wanted to mention that at the outset to this gathering, that insurance has been an important segment of our work, of CII's work, even before the sector opened up. I mean, over the years, CII has actually maintained that developing the Indian insurance sector is one of the most important imperatives for spreading financial inclusion, and as well as safety, as well as garnering resources for finding long-term growth for our economy. And as we really addressing two critical issues, the issue and the challenges faced by the insurance sector in India, closely working with the government as well as with our regulator for formulating some of the most progressive policies that we have seen. And as Sanjeev was mentioning before the start of the program, sometimes the regulator is much faster ahead. And I must also make a special mention that we have actually, there's been a fantastic partnership between the US Embassy, which has involved CII and other institutions in the US to promote collaboration between US and India across many sectors, actually. And I'd like to highlight and acknowledge again the embassy in the US on its many initiatives to commemorate India at 75, which is Azadi Ka Amrit Mahotsav, as I said. And today we have with us the ACLI and the APCIA from the US, who have tremendously contributed towards building up this strong panel that we see in this webinar. I, for one, believe that the Indian economy, as it's taking stride towards a continuous high growth development, the US-India friendship, from which regarding which we will hear much opportunities for mutual growth and development. And while most of the sectors have been making significant progress, insurance sector is such a great sector that we really would work towards greater collaboration and dialogue, as the sector has phenomenal implications on financial security for all of us. And with the changes in the regulations, to the changes in the policies, with FDI caps at 74, setting up of the IFSC Gift City, Gandhinagar, and many more reforms which are on the anvil, there is fantastic scope, if one can say, for international insurers to start reinsurance and insurance operations in India in partnership with our corporates. And the US is our largest trading partner and a very important destination, and a most important destination, if I can say, of our exports. And many of the US companies view India as an important market and have expanded pretty much their operations, those who are present here. And we have record trade levels despite the pandemic. On the other hand, our companies, Indian companies, seek to also increase their presence in the US markets. And at the end of 2020, our investments in the report that we had published totaled more than $12.7 billion US dollars, and supporting over 70,000 plus American jobs. And we have had a wonderful set of people here with us today in the VC. I mentioned to you about Mr. Taranjit Sandhu, our ambassador, and Mr. Debashish Panda, the IRDAI chair. And also we have two important speeches that would be following Mr. John McCallan of the MetLife, and Sanjeev Bajaj, who is well known in the sector and is also the president of CII this year. And Tapan Singhal, who chairs CII's Insurance and Pensions Committee, will have a very, very strong panel to moderate. And sincere acknowledgement, I'd also like to mention about Dr. Ravi Kota, the Minister Economic at the Embassy, and also Mr. Saurabh Mishra, the JS at India's Department of Financial Services, and someone very important who has been contributing again. Ladies and gentlemen, let's look forward to a good dialogue ahead on how we can get set for a better and a higher collaboration between our two countries on this very important and critical sector, which is the insurance sector. So welcome to you all once again, and thank you very much for joining us. With that, I now request Ambassador Taranjit Singh Sandhu to share his keynote remarks, please.
My good friend Debashish Panda, Chairman of Insurance Regulatory and Development Authority of India, Senior Leadership of CII, Sanjeev Bajaj, Chandrajit Banerjee, and other friends, John McCallan, the Executive Vice President of MetLife, distinguished participants from Ministry of Finance in India and the US Treasury Department, leaders from industry, and their friends. I'm delighted to join this event on enhancing India-US collaboration in the insurance sector. This event is special, coming close on the heels of marking two important milestones: the 75th anniversary of India's independence and 75 years of diplomatic relations between independent India and the United States. Over the last 7.5 decades, India-US relations have expanded both horizontally and vertically, be it strategic, commercial, financial, cultural, scientific, or educational. Bilateral cooperation between our two countries has been growing from strength to strength. With the robust political leadership and commitment of Prime Minister Modi and President Biden, all of us are striving to take the bilateral partnership to the next level. Financial ties have been an important dimension of our bilateral relationship. Finance Minister Nirmala Sitharaman visited the United States twice after the new administration took charge in Washington, D.C. She held the Economic and Financial Partnership meeting with Treasury Secretary Yellen in October 2021 and met Commerce Secretary Raimondo earlier this year. As we speak, Deputy Secretary of Treasury and my dear friend Lic Act is on a visit to India. We have also made substantial progress following such high-level engagements. India and the United States signed the investment incentive agreement in Tokyo in May this year. Out of the record $84.83 billion FDI that India received in 2021, almost 18% was contributed by the investors from United States, making the US one of the key source of FDI into India. On the other hand, Indian investors have also made significant contribution to the US economy. As per reports, 155 Indian companies have invested nearly $22 billion and have generated nearly 125,000 jobs in this country. Dear friends, as we know, the past 2 years presented challenges to the global economy on account of the pandemic. India has, however, worked to convert these challenges to opportunities, further liberalizing its FDI policy regime across sectors, eliminating regulatory barriers, improving business environment, and efficiently implementing reforms. In India, insurance is an industry that will see exponential growth and investment. The sector grew at an impressive rate of 17% over the last 2 decades, but is still far from being fully tapped. By 2026, India's insurance market is expected to reach a value of $222 billion. With this potential, when we look forward to the next 25 years of the US-India economic partnership, insurance sector would be a key pillar. Government of India has already put in place a better policy framework for domestic and global insurance industry to flourish. In May 2021, FDI limit in the insurance sector in India was increased from 49% to 74%. I'm sure it brought excitement to our American friends in this sector. In fact, during a recent interaction that I had with investors in the West Coast, the enthusiasm for Indian insurance sector was palpable. As Prime Minister Modi said during his Independence Day address, India's decade is here. Combining fintech innovations would give shot in the arm for India-US collaboration in the insurance sector. In the United States, insurance has evolved particularly in the property, casualty, and climate areas where the Indian industry can absorb some of the experiences. Dear friends, the strength of our financial and economic relations stems from our shared commitment to fostering stable market economies. I'm confident that today's conversations on insurance would further deepen these ties. I wish the event every success and look forward to its recommendations. Thank you.
Thank you. Thank you so very much, Ambassador, for sharing those very important insights and your perspectives on Indo-US collaborations, specifically to the sector. They're indeed very, very encouraging for the industry to adopt a long-term view of the Indian markets, and we'll continue to work with you and engage with you and the embassy to see how we can deepen this further. Thank you very much, Your Excellency. We now move to the IRDAI, the Insurance Regulator Development Authority of India. The chairman, Mr. Debashish Panda, who having worked in the finance ministry, is in a position today to promote the sector while balancing government policy, regulator concerns, market needs. And so may I now turn to the IRDAI chair, Mr. Debashish Panda, to address this session and share his vision.
A very good morning to our friends who have joined from America, and a very good evening to our friends from India. First of all, I'd like to thank the Embassy of India, the Confederation of Indian Industry, the American Council of Life Insurers, and the American Property Casualty Insurance Association for putting up this webinar and inviting me and to speak on this occasion. So a big thank you to all of you. I also extend my warm greetings to my dear friend Taranjeet, Ambassador of India to the US, Mr. Banerjee, the Director General of CII, Mr. Brad Smith, the CIO of the ACLI, Mr. Stephen, the Department Vice President of the APCIA, and again, my warm greetings to all the distinguished dignitaries and other delegates who are attending today this webinar. Well, I'd like to start this discussion by giving a glimpse of the insurance industry in India. As you are all aware, since 2000, the sector has been liberalized, opening the gates for the private sector also to join along with the public sector companies. And since 2000, the sector has witnessed multifold growth. If I were to talk in numbers, the gross written premium has increased from USD 5.6 billion in the year 2000 to US 115 billion in FY 21-22. Similarly, the number of players who are in operation in 2000 has grown 10 times, from 7 to almost 70 now. Today, I would look at the Indian insurance sector is at an inflection point and ready to really leapfrog from where we are today. The market has matured, and with a well-known, well-knit ecosystem of more than around 70 players and about 4.5 million distribution points, significant number of service providers, a large number of academic institutions to support, and also overall generating more than 6 million people, providing employment to 6 million people. So all of this has happened in the last 2 decades, ever since the sector was opened up. Further, in recent times, as Mr. Banerjee has explained, and also Mr. Sandhu, I would like to reiterate that while I was at the DFS as secretary, we opened up the sector further for FDI investments. The insurance intermediaries sector was opened up even before for 100% FDI. And now the insurance industry was also further opened up to 74% with ownership and control. So the long-standing demand has been met now. The other major reform that has been carried out by the government of India is the largest life insurer in the country, the LIC, the Life Insurance Corporation of India, has now been listed. And I'm sure with this move, there will be more transparency, better disclosures, and increased value to the policyholders, the shareholders, and it becomes a market-driven approach. A lot of other companies are also following the same pattern of going and listing their companies to raise the capital and also make it more broad-based in terms of the investments. The other announcement that the government has also made during the 20 budget is about privatization of the public sector insurance companies. So that is also the statute has been amended, and it paves way for also the privatization of the general insurance companies in the public sector. So I think a lot of reforms, and then this has also been followed by a paradigm shift in the regulatory approach. The regulatory outlook, the regulatory framework is also looking at what is happening across the world and how do we keep ourselves abreast with the developments around the world, and we are in sync with what is happening all around so that we also witness a big growth. And as all of you have already mentioned, the previous speakers, we want to actually grow in exponential numbers, quantum jumps, and build a very mature and a stable and a robust industry in this country. Now, all these reforms are also making it possible to build a robust ecosystem around this insurance industry. And as we are moving forward, the insurance, considering the fact that the insurance industry has also attained sufficient maturity and is no longer in that nascent stage, we feel that it is time that we should leave a lot of things to the industry, give them the freedom and flexibility to operate. And thereby, we are now moving from a rule-based regulatory regime to a more of a principle-based regulatory regime. To propel further growth of the industry, also regulatory interventions like easier registration of new insurance companies. Earlier, it used to take about 4 to 6 to 8 months, but today we have really put up it on a very fast track where the processing of applications begin and it ends within a period of not more than 2 months, so that the unit can come into operation. So what we have done is we have created facilitation cell for hand-holding. The moment an application comes in, there is a facilitation cell of 2 officers doing the hand-holding till the entity gets its approval to start its operations. We have put up guidance document now on the website, making it easy for the new applicant to file his application in toto and in completeness, so that there is no room for making an additional query. Then compliance, ease of doing business has been the mainstay of our approach, so that the new entities or the existing ones has the ease of operations. And also what we are attempting to do is to reduce the compliance burden. Another of new initiatives come. I'll go through that as I have prepared a small presentation. In nutshell, what I would like to say that the regulatory processes and the framework has been simplified, and the process is still on to take care of those nitty-gritties which are still there, and to overhaul the entire system in enhancing the ease of doing business in the Indian insurance industry. We are also committed to provide a very conducive environment to support the healthy growth of the insurance industry by also providing sufficient freedom and flexibility to the players, so that there is ample scope for innovation and also competition. And that in turn is going to give wider choice to the customers. So this is the philosophy the underlying philosophy in which we are trying to build the regulatory system here in India. And I'm sure in times to come, you will all witness that this will enable you to grow more and grow faster. I have put together a few slides. With your kind permission, I would just like to take you through maybe in the next 4 to 5 minutes so that you get a snapshot of what all has happened. And I would like to also invite, if there are any suggestions, then we will take note of that. So I'll go to the first slide. So as I said, Indian insurance is at an inflection point, and then it is poised for tremendous growth. What do I mean by that? I would say that the drivers of growth are absolutely, raring to go take this. I mean, the sector turns around and it assumes or attains a quantum jump. First of all, the household disposable income is growing at 2 times the GDP per capita. Secondly, the discretionary spend. There's a higher percentage of discretionary spend that is available. The household savings are getting formalized, and the growth in the number of nuclear families is also being witnessed. So all of this are some of the major drivers of growth in the insurance sector. We also are seeing that the millennial women, rural and semi-urban Indian population, about 150 million are going to get added to the workforce. This is also going to propel India's insurance growth. India is also on the path to become a preeminent tech-driven digital economy with initiatives like UPI, FASTag, and there are several others. And then, of course, the startup boom that has fueled more than 100 unicorns and more than 300 active insurtech startups. India Stack is also further enabling us to access the financial services, and the financial inclusion program of India is something which is unprecedented, which has happened in the last 4 to 7 years. Insurance in India is also at an inflection point, because if you look at and how it is going to accelerate, because the insurance premium as a percentage of GDP has doubled in the last 10 years, and we expect this to grow even faster. Then the insurance sector in India is also giving a higher return of on its equity to players relative to the other developed geographies. This is a point to note for our American counterparts also, and I'll show a slide which demonstrates the kind of growth that is being witnessed. India's aspirational vision also will transform the sector with increased penetration, greater coverage, higher customer trust, digitization, and also the under-penetrated lines, particularly if you look at property, you look at healthcare, you look at SME and the growth of SMEs, and the long-term products like retirement. All of this are something which has tremendous potential for the insurance sector. What are the key interventions that has been made and how it is going to help propel the growth in the sector? The first one is, as I said, ease of doing business. The second is the industry economics and the benefits that are going to accrue. Third, the distribution efficiency. And fourth, the most important one is the customer trust. So the last pillar here is the American industries collaboration and investment will be a win-win for US investors and also for insurance in India. This is basically the first pillar which I explained, which is talking about the real GDP in India, the disposable income is increasing, and the millennial population, and also the population in Bharat, that is the urban, the semi-urban and the rural India, where the workforce and the women workforce is getting added in large numbers. And the tech-driven and the digital economy is also going to propel further growth. Now, if you look at the pandemic during the COVID-19, now India has been, the growth story even during that time is something worth looking at. India launched the world's biggest vaccination drive, and the entire population fully vaccinated, and India also became the major supplier of vaccines to countries across the world. If you look at the relief package which we provided, 10% of the GDP for social protection, healthcare, food distribution, large cash transfers to the low-income population, wage support, insurance cover for the frontline health workers, augmentation of the healthcare infrastructure, all of this happened during these 2 years of the pandemic. Then the government also undertook a series of measures to shore up the credit provision to the industry and also to provide production-linked incentive to around 13 priority sectors, and that was worth about USD 160 billion. Then the total number of claims, insurance claims which were paid during this period, 2.7 million health-related claims worth about USD 3 billion, and 240K mortality-related claims worth about 2.25 billion were settled during the COVID pandemic. That itself speaks in volumes about how the Indian industry is matured and how quickly they were able to disburse these claims. This I will not repeat. This talks about the household disposable income. Then the next one is about again, as I said, the employable women, the growth in internet penetration, the financing to the MSMEs and the way which they are growing. They are all actually tremendous growth potential for the insurance in the country. Now, India is also on the path to become a preeminent tech-driven economy. We have 750 million plus smartphone users, 650 million plus internet users, 40 trillion worth of digital USD, 40 trillion US dollars worth of digital transactions happened alone in one particular year, that is FY 2022. Then, of course, the startup ecosystem, which is maturing and growing. Then, of course, the digital infrastructure that has been built, the UPI, the payment and settlement system in India is something which I think the entire world is looking at. The FASTag, Bharat Bill Pay, Bharat QR are some of the illustrations or examples of what has happened here in India. Now, in financial inclusion, which includes insurance inclusion, through a number of government initiatives, particularly the flagship programs, has also transformed the entire landscape of financial inclusion. And with zero balance accounts opening, which we call the Pradhan Mantri Jan Dhan accounts, today 460 million Jan Dhan accounts have been opened, and out of which 260 million accounts holders are women. 300 million coming from the rural areas and semi-urban India. And the average balance today from zero, it has gone to almost 22 billion USD. Then the Pradhan Mantri Jan Arogya Yojana, it's again another big game changer for health insurance for the people who are living below the poverty line. 500 million citizens have been covered. Then Pradhan Mantri Mudra Yojana is a small ticket financing to the small entrepreneurs, micro entrepreneurs, that also has changed the landscape. And now these set of people are now coming into, forming bigger entities by taking more credit from the banks. And therefore, here again, the insurance, penetration is something which opens up scope for the insurance industry. Two flagship programs, the Jeevan Jyoti Bima Yojana, Suraksha Bima Yojana, again, micro insurance schemes also have taken a lot of, care for people who are in the bottom of the pyramid in terms of their development. These are again low ticket insurance schemes. And this has also helped in insurance penetration, particularly in the rural areas. The crop insurance scheme, again, a flagship program, has also led a lot of financial support to the farmers in the event of failure of crops because of some natural calamities and disasters in particular. Indian insurance industry, if we look at this slide, see the premium to GDP, which we normally know as the insurance penetration, we have moved in that ladder. You see, there are some major countries which we have surpassed, like South Asia, excluding India, is at 0.70. China is at 3.90, whereas India is at 4.20. However, we are not complacent, or we are not satisfied with where we are. We want to move and catch up, not alone with the world average, but also with the developed countries. So our effort is to grow and reach those levels. If we look at the insurance sector growth, so I look at it, if I compare with the banking sector, then here the insurance gross written premium or the insurance density has grown at 10% per annum, whereas the bank deposits are growing at only 8% per annum. If you look at the private Indian insurers, we see that there is a higher return on their equity on average compared to the American insurers. So if you look at the life insurers, it is 12, 15, 18, 19%, whereas general insurers 13, 20, 21, and 22. So the leading Indian insurers have averaged around 23% return on their equity, whereas the American insurers, I think it is around 13% is what they are earning on their equity. So if we factor the risk, even then about 500 to 600 bips will be the number higher than the Indian insurers. So again, there is tremendous potential for the American companies to come and invest in India. That's the point I'm trying to make. India's growth is now, we have very high aspirational growth targets now. I've recently had a meeting with all our CEOs, and we have tried to discuss and share that what should be our growth targets. Now, if you look at the GDP, the gross written premium in 2017, it was $16 billion US. 2022, we are at 115. We have grown at around 10.5%. Now, our target in 2027 is to reach 500 billion USD. We have kept an aspirational growth target of 34%. And I'm glad to inform that many of my CEOs are quite ecstatic about these targets, and they are all raring to go. Premium to GDP, 3.7 currently, 3.7 in 2017. Currently, it is 4.2. We want to reach 8 to 10% by 2027, and that will entail a growth of 16%. I mean, it is not impossible. The question is, it is definitely achievable, but it may be, you have to build that appetite, expand our reach, and a variety of things have to be done, and we are trying to do that in a very strategic manner. So the Indian insurance landscape has also evolved greatly with the introduction of advanced products, like pay how you drive, mobile insurance, bite-sized products, parametric insurance, specialty lines. We are moving towards that regime. And our vision is insurance for all by 2047. So that is what we are looking at. Now, what are the leading interventions that has been made by the regulator in the last few months? Now, I put it into three pillars. The first one is ease of doing business. I already mentioned that speedy registration, increased FDI ownership for MNCs, new insurers to obtain registration to start operation within a couple of months. reduced compliance burden. The frequency is reduced and the number of regulatory returns have been reduced. We have a regulatory sandbox approach for conducive environment to experiment with innovative solutions. So both tech and otherwise also. Frameworks such as RBC, the risk-based capital, the IFRS, the International Financial Reporting System, the RBSF, the risk-based supervisory framework has already been initiated, and I'm sure that is going to free up a lot of capital so that capital efficiency will come, accounting standards become aligned to the international ones, and RBSF will be a much more robust way of monitoring and supervising the entities. For distribution efficiency, the open architecture, the distribution is in our system is rather closed. We are gradually opening it up, and I'm sure in the next few years we are going to have a completely open architecture. Simplified onboarding for our intermediaries is what we are trying to do, and the renewal process is being streamlined. It becomes one-time registration or auto renewals. The ecosystem for the InsurTech and allied technologies, in order to support the distribution platforms, we are nurturing this and we are trying to encourage this. In this attempt, we have already held an InsurTech conference recently. We are going to have a few more, and we have organized a hackathon. The regulatory sandbox is getting revamped. The guidelines and the regulations are getting much more proactive and modern to suit the requirements. So all of this is being done. Now, what are the industry economics and benefits? Now, greater control on profitability by board. What we have done, we have rationalized the expenses of management and left to the company to decide how they want to spend, where they want to spend. We don't want to put a cap on everything, how much on commission, how much on reward, how much you have for salaries and so on. That will be left to the boards of the company. So that gives you a more leeway to decide where to spend and how to spend. Distribution, compensation, flexibility is being provided, and the investment regime is being liberalized. Similarly, the product approval process is being streamlined. Instead of file and use and file is what we are asking the industry to do. And this is also going to encourage innovation and wider choice for the customers. Value-added services is in consideration, so it will help health-related services and other services as well. Yeah, so the challenges which were there and which was coming to us from time to time have now been addressed. There was a traditional structural challenges, and the interventions have already been made, which I have just mentioned to all of you. So ease of doing business, the economic benefits to the industry, and also the distribution efficiency. The other thing which is we are trying to do is to build the trust of the customers. We are trying to build the customers' trust as insurance as a product. Now, how we are doing this? We have identified the pain point, and we have also identified what should be the initiative. We are trying to also encourage the industry to come on board to create a digital platform, which we may call it the Bima Sugam. With this platform will be utilized for selling the insurance products, for servicing the policyholder, and also for settling the claims. It will be a plug-and-play solution, and all the insurance companies get onboarded to that system. And I would presume this would be a game changer as far as insurance is concerned. Then Bima Vahak, a community-centric channel which will be enabled by technology and led mostly by women, is what we are contemplating, particularly to take care of the underinsured and uninsured in the tier 2 and below cities, the rural and the semi-urban city areas, so that we can reach out to them faster, and our insurance inclusion and also the penetration would grow. Again, most importantly, customers' grievances. How do we address them in a manner that gives them the utmost delight? We are in the process of revamping a portal which we had, and we are going to call them the Bima Bharosa portal, which will have all the analytical tools and all the other technologies of AI, ML, And I'm sure this is also going to be a game changer in terms of building and also gaining the trust and confidence of the customers. If we look at this slide, I would now like to call upon my American friends to pay attention to this slide. If you look at the major American companies, which I would categorize, about 50 American companies are the lead players and are operational almost everywhere around the world. So China has 14 out of 50. Singapore has 18 out of 50. I mean, they are investing in Singapore. Hong Kong has 13 out of 50. Indonesia has 10 out of 50. Malaysia has 9 out of 50. Whereas India has only 4 out of 50. AIG, Liberty Mutual Insurance, MetLife, and Cigna. My appeal to our American friends is now is the time to come and invest here in India. The FDI regime has been liberalized. The regulatory regime is looking forward to shake hands and take you through this journey. So this is the time, and India is poised to grow. The economy is poised to grow. And I said the millennial population, the women, the discretionary spends, the household savings, all of that are now tremendous potential and opportunity for the insurance sector to grow. And our vision 2047 can be realized if we have more capital coming into the country and more investments coming into the country. So I would like to welcome all of you to join us in this pivotal growth journey of the Indian insurance. And I'm sure it is going to be an exciting and an interesting one. So thank you very much for the patience and for hearing me out. Thank you very much. Have a nice day.
Thank you. Thank you very much, Mr. Panda. A very, very informative presentation, deep insights, and a huge amount of work which is going on, which was very clear. And of course, one thing which we have said, and I reiterate, the speed of action from the regulator. So thank you very much for that wonderful presentation. I'm sure you will find many responding to it as they speak along. And we have coming up two viewpoints, one from the US and one from India. John McClellan, the Executive Vice President and Chief Financial Officer of MetLife Inc., to give his important remarks, but I would urge him to also refer to the presentation that you just heard. And if there are comments, please do come up with it. Over to you, Mr. McClellan.
Yeah, thank you, Mr. Banerjee. Let me just start by saying that it's an honor to be here, and certainly together with this distinguished group on this important occasion to celebrate the 75th anniversary of India's independence and to commemorate the 75 years of the U.S. and India ties. It's really a remarkable milestone, and what you've heard from the ambassador and Chairman Panda has and will continue to be, I think, a real extraordinary journey. I was just meeting with our general manager of PNB MetLife India and recalling our own journey and how excited we are to be part of the country's progress, how excited we are to fulfill such a noble purpose to society. And at our company at MetLife, we're proud to be part of India's story for the last 20 years. Since that time, we set up our joint venture in 2001. Today we employ 8,000 full-time staff, and we have over 2 million active policies in the countries. And then similarly, building on that success, we've also established a global operations and servicing center in India. We started that in 2007. It employs 3,500 people across 3 sites. Our MetLife businesses around the globe rely on our colleagues in India across a wide range of vital functions. And I know this firsthand. I've seen the team in action, and that team plays a vital role in us filing our quarterly financials. So I thank them every day for that. As a 150 plus year old global life insurer based in the US, we're continuously looking for markets in which we can kind of bring our global expertise to bear, combine with that local talent and innovation, as you heard, and really try to cultivate those successful businesses while also serving our purpose, which, we reference as always with you, building a more confident future. India has been a real shining example of those benefits, where we've combined that global expertise with the local know-how. So for example, PNB MetLife India, we rolled out this digital onboarding service for our distribution and our customers, leveraging our state-of-the-art architecture and framework from the broader MetLife. And now today, 100% of our bank assurance customers are onboarded digitally using this technology. So with so many of those key ingredients in place to build a thriving insurance sector, we see excellent progress in the country through this ambitious reform agenda that Prime Minister Modi's government is putting in place, and as you heard articulated from Chairman Panda. And we've really observed that in the most advanced insured sectors in the world, they really have these robust mechanisms for dialogue. And we see that today between policyholders and industry. So we're very excited about that. And that outreach that has occurred and really sustained, that follow up with the IRDAI and the government and how they put that in place, it's really heartening, truly heartening. And that it has all the right ingredients and elements to initiate and drive some of those ambitious goals that we just heard. And as you heard in the previous opening remarks, there's opportunities for investments. We MetLife actually just placed another multi-million-dollar vote of confidence, if you will, as we increased our stake in PNB MetLife this year. So we see the immediate and the long-term promise of the Indian market. We look forward to the continued joint efforts to build India's insurance sector. And in summary, I just want to wish you all a productive day of discussions, and thank you for the opportunity to join you today. And let me turn it back to you, CB.
Thank you, John. Thank you very much for that wonderful remarks, and thank you for being so upbeat about India. And we look forward to greater engagement with you in India. With that, may I now invite Mr. Sanjeev Bajaj. Sanjeev is the president of CII this year and also the chairman and managing director of Bajaj Finserv, which is the holding group company for all the financial service business that he controls. And over to you, Sanjeev, for your address.
Thank you, CB, and also the chairman of Bajaj Allianz. So it makes it a little bit more relevant. But good morning, good evening to Ambassador Sandhu, IRDAI chairman, Sri Panda, and leaders from the US and Indian industry. We have an interesting set of discussions today. I think from the comments that have already been made, and especially that very detailed, robust, but also encouraging speech and presentation made by the chairman IRDAI, it very clearly sets out the focus of this new India, of the Indian government, of the regulator. It's an opportunity where they're calling out to industry. They're telling us that come and tell us what can we do to improve penetration, to increase insurance in India. India is open for all. Whether you're an Indian company or an American company from elsewhere, we're going to treat you equally. We're going to make life easier for you. But then help us build insurance in India. Help us take insurance to the last mile in India. And with the detailed presentation that he made, I would just like to leave a few thoughts for the discussions later today. India is very much a country in contrast. So over the last 20 years since insurance was opened up to the private sector, as Sri Panda said, we've gone up from about 7 companies to over 70. But on the other hand, it's still a fraction of the number of companies in a small location like Hong Kong or the UK, let alone the thousands of insurance companies in the US. If we talk about the last 20 years, we have seen a CAGR growth rate of 17%, despite the global financial crisis, despite the period of taper tantrums, despite the recent pandemic. And yet, while we are growing in our penetration, as Mr. Panda said, we are still only 4%. We are less than half or a third of some of the other markets in the developed world, which goes to show what's the kind of potential that's there. For my colleague from MetLife and others who know the insurance industry, you know how competitive it is. It's competitive when you're selling motor insurance. It's competitive now for health. But on the other hand, when you look at home insurance, it barely exists. When you look at other liability lines, they hardly exist. So is it a glass that's half empty or a glass that's half full? When you look at India and you look at the physical infrastructure in India, something that was lagging our peer countries for many decades and which is quickly coming up to speed, that's providing a significant physical network and one that the regulator has recently further opened up for additional business. But when on one hand we talk about a physical network, let's look at our digital network. Our digital network today leads the world from a unique digital ID to 1.4 billion Indians, the cheapest and one of the strongest mobile phone networks around the country, which now from 4G will soon move up to 5G in the next couple of months. From bank accounts, digital bank accounts for over 1 billion Indians, where you can open a new bank account in less than 15 minutes using digital KYC and digital IDs. How are we leveraging, I would say, that network? So is it in India, which is available for those that want to leverage our physical networks? It's also, on the other hand, in India, where you can leverage our digital networks. Do you want to be a physical insurance company? Do you want to be a digital insurance company? Or do you want to do both? The slide that IRDAI chairman showed, that of the top 50 companies, there are only 4 American companies versus multiples in some of other markets. Is it because we Indian companies are more competitive? Or is it because there is opportunity on the table that is to be grabbed? So when I look at the market, when I look at the opportunity, when I look at the fact that we have a strongly supportive regulator, a regulator that is going to ensure compliance, that is going to ensure competition, but that is also encouraging us to do more, I believe that the next decade can be one of tremendous opportunity. It can be one where we can do our role for financial inclusion, but we can do that profitably. It can be a role where we can build business multiples of what many other countries can provide, but we can do so knowing that it's going to be long lasting. And with the moves that our government has made in recent years, it reinforces the fact that we are a strong democracy, the rule of law works. Sometimes it may take a little longer than otherwise, but it works. But this government and this country is looking for our friends, our partners from the US to see how can we learn from each other, how can we collaborate, how can we leverage the innovations that exist in your markets, but also do it at a fraction of the cost, which is where the large volume of the Indian market lies. And I hope some of these points come up for discussion. What I'm sure is going to be an interesting set of sessions with leaders from both sides after this. So with that, I can speak a lot more, but I'm not going to do that. I'm going to thank all of you all once again for taking your time out today, and we're looking forward to an interesting set of sessions after this. Thank you.
Thank you. Thank you very much, Sanjeev. Thanks for sharing your thoughts on the opportunities present in the Indian insurance market. With that, ladies and gentlemen, we will now have a panel discussion on the US-India insurance industry, partnerships to boost economy, inclusiveness and innovation. And the session will be moderated by Tapan Singhal, the chairman of CII's National Committee on Insurance and Pensions, and he's also the managing director and CEO of the Bajaj Alliance General Insurance Company. And for this session, we have with us some very, very important and prominent personalities from the insurance sector, from India as well as from the United States. And they will all be sharing their perspectives on this including subject. And we have Mr. Saurav Mishra, the Joint Secretary of the Department of Financial Services from the Ministry of Finance of the Government of India, and Mr. Steve Steeds from the Director of the US Federal Insurance Office, besides many, many other very, very remarkable people. Like we have Kimberly Clayman, AJ Singh, R.M. Vishakha, and Stephen Simchak with, and of course, Brad Smith. Over to you, Tapan, to moderate this wonderful panel.
Thank you, CV. I think it's been a very interesting session. A very good morning to my friends from US and a very good evening to my friends from here in India. I think the beauty, if I look at it, and we heard so much about the market here in India, the opportunities here, but let's look at some data and facts. 6,000 insurance companies in US and less than 100, or 60, 70 in India. $1 trillion of US insurance premium, and we have 115 billion US dollar in the Indian context. Now, if I look at, and we heard the penetration still very low, about 4, and it can go up to US at about 11 or 12. At the same time, if you look at India's ranking globally in terms of the insurance market, we're already among the top 10. Now let's put this data together. We're the top 10 insurance industry globally, still highly underpenetrated, less than 100 insurance companies, and you put it to US 6,000 companies, $1 trillion. And if the way we heard the story of India moving forward and things happening, how long will it take for India to be in the top 3 and maybe competing for the top 1 or 2 positions? And we also heard the ambition. Our chairman for our regulator IRDAI, Mr. Panda, mentioned very clearly that in just about 5 to 10 years' time, he's already seeing a huge leap in terms of how India is moving. We heard our president for CII, Mr. Bajaj, speak about that in terms of our penetration and let's say home insurance penetration of less than 1% even now. So the opportunities which are existing, which are just exploding, so big. It's going to be a very interesting discussion that we'll have. And we're looking at a panelist, really brilliant people. I think some of the best that we could get together. It'll be interesting to hear the views as we move forward and see what could we pick up from the discussion points there. I'll start by asking some questions and obviously introducing my panelists as we go along and listening to their points of view. And obviously they're free to chip in and speak what they like to speak. First, Brad Smith. Brad Smith, he's the international officer for American Council of Life Insurance and very active in this field of what all he has done. So, Brad, may I first ask you that as we celebrate 75 years of US-India economic partnership, what are ACLI's members' investment interest in India as the world's largest democracy? Is India an attractive market globally for investment by your members? Brad, over to you. And if you want to add something more before move forward.
Thank you. First, I just would compliment the embassy for hosting this. I would say that, I think the theme you've identified is how to build and support market-based insurance products to help meet the financial security needs of Indian individuals, society, families. I think that we've laid out, or Chairman Panda has done an excellent job of explaining really a fundamental change in the approach to regulation, and also outlined the last year, the 2021 increase in equity to 74% being a bellwether or a fundamental change. And then he mentioned paradigm shift for regulation. While not defending the number of U.S. insurance companies in India, I would just mention in the past there have been more. Some have withdrawn, some have been acquired by European or Canadian, indeed Japanese companies. So the companies are still there. The ownership has modified. We should remember this is a process of 20 years. And I just would say, I think the word that's been used most here has been excitement. And excitement at the change that the revision in 2021 allowing 74% and increasing the management freedom and control by foreign investors has really signaled a change in the opinion of American investors in India, including some of those who have withdrawn. Chairman, you put out the relative comparisons to some of the other markets in the world, and I just would say our members strongly support India purely because you are a democracy, and you are a market-based economy, and that the changes that you've made since 2021 in increasing equity in the vision laid out by the finance minister I think it's established a pathway for American companies to see India moving from a developed market or developing market to a developed market. And I think you've outlined that you now see the needs to protect the domestic industry as no longer in the best interests of consumers. And that what you're trying to do is attract as much business, as much innovation as much technology into India as possible, and we support that. We would love to begin a dialogue with Chairman Panda. ACLI also has members from 22 countries around the world. So I think all of our members, I think everybody invested in India is a member of ours, whether they're Canadian or European or Japanese. And I think a number of those people are on this call because we invited them at the embassy's request. Continue what you're doing. Thank you for the increase in transparency. I think the more members build up, the industry builds up confidence in India. And to not restate what is probably going to be said in coming panels, but I think also the work between the Ministry of Finance and U.S. insurance regulators to increase the confidence between regulators is tremendously important. As was pointed out, we're a global industry. Indian companies, U.S. companies invested in India are part of a global supervisory structure. Chairman Panda, we look forward to seeing you in Santiago de Chile for the annual meeting of insurance regulators. I think there'll be a great deal of interest in establishing. You've done an excellent job of establishing a dialogue with the domestic industry and your advisory committees in India. Just please know there's great interest amongst the global insurance community, especially amongst U.S. industry, but also our global colleagues in furthering the dialogue. And part of what can be done is there are still some differences. The safeguards that were included in the 2021 legislation on naming of management, those are things we think that can be worked out through bilateral discussions as the regulators build confidence in each other, and we think continue following down the same path. I would point out, I'll be happy to send you a few amendments. I think you missed one or two American companies on your list. I will get you a complete list. We have members in India, both in terms of those that have gone above 26, and then we have also members that have stayed at 26. So there's slight differences. And then we also, and as MetLife pointed out, India is tremendously important to our member companies in terms of their back office. We have many companies in the U.S. that don't even operate or sell in India, but they have huge employment and back office technology support. So there's tremendous importance, and we thank the IRDAI for the maintenance of continuity during the pandemic that allowed for a continued operation of the global regulatory system.
Thank you, Brad, for your comment, but I just want to add some small bit from my side. When you look at the presentation which Mr. Panda made and the ROE that the companies just stayed on made, I think the companies which withdrew from the market would now be repenting as to why they did so in terms of over 20% ROE which has been made. And I hope they all come back again and they're able to be part of this growth story of India and be able to get good returns. But I think very good comments from your side. From here, I want to move on to something, again, very important from India's perspective. And also, if I look at U.S., the way it does it is phenomenal. We see the natural catastrophe really moving up. In the Indian market, if I look at now, if you have floods, you have cyclones happening. And we look at the U.S. market, I think that is something which they have been able to handle very well from insurance perspective, from mitigation of risk perspective, and the way they control it. And for this, I'd like to invite Stephen. Stephen, who is the Department Vice President, Head of International and Council American Property Casualty Insurance Association, to speak about this. And if I may, Stephen, and you can add if something else you want to add, but the question I have for you is that most markets around the world are facing increased natural catastrophe risks due to climate change and other phenomena, and India is no exception. What can US and other non-life insurers do to help Indian consumers, business, and the government address natural catastrophe risks? Stephen, over to you.
Thank you very much for that excellent question, and I would just echo the words of thanks from Brad for the Indian Embassy here in Washington, D.C., and to the IRDAI, Chairman Panda, for convening us here. It really is an honor to participate. So thank you very much. Well, that's a great question. I think that to answer it, we need to consider that there's the profile of natural catastrophes and the protection gap for natural catastrophes really is changing at a significant pace. And also to think about how insurers can help close that gap and address natural catastrophes. And in doing so, make societies overall much more resilient. I really doubt I need to remind this group and our esteemed government officials about this, but the bottom line is that natural catastrophes are getting worse over time, and developing countries tend to be hardest hit relative to developed markets. The frequency of natural catastrophes increased by 28% this decade versus the previous decade. And looking at the Asia region more broadly, in 2020, floods affected more than 50 million people, which led very sadly to more than 5,000 deaths. In India itself, I was just reading the latest analysis. By 2030, it's expected that heat and humidity increases could lead to 160 million to 200 million more people living in regions with a 5% average annual probability of experiencing a heat wave that exceeds the survivability threshold for a healthy human being. That increase in heat is going to have an enormous impact on agriculture, on people's health, and on weather patterns, as we know. So we can all agree that there's an enormous natural catastrophe problem. That begs the question that you posed for this group, which is what do insurers, non-life insurers, what can we do to help? Obviously, insurance plays a critical role in terms of transferring and mitigating risk, of course. When we think about insurance, the most obvious role that it plays is paying claims after an insured event. And that could include anything, the entire spectrum of natural hazards. That includes cyclones, severe thunderstorms, floods, or earthquakes. When an event is insured, insurers provide rapid financial relief to individuals, families, and businesses and companies to help them get back on their feet quickly. And actually, research from the Bank of International Settlements suggests that after a natural catastrophe, if a sector is properly insured, they may actually experience faster and greater economic growth than they did prior to the natural catastrophe. So the case for insurance as an indemnifying factor is quite strong. And the reason that insurers are able to do this so successfully is through geographic risk diversification, among other factors, often with a significant role for reinsurers that spread and dilute the risk around the world rather than have all of that natural catastrophe risk concentrated in one country or region. I should also note that this de-risks government balance sheets as well, as the OECD recently pointed out, since governments have to spend less on recovery efforts when a populace is properly insured. That's insurers' primary essential role, but there are other ways insurers are helping address natural catastrophes as well, both before and after natural catastrophe events. Insurers are able to model climate patterns in a way that few others can or have the resources to do. And they also send price signals to people, businesses, and governments about the scope of the risks they face and the changes in the scope of the risk they face. And through underwriting can incentivize improvements in building codes, land use, et cetera. I'd also note that non-life insurers, and especially actually life insurers, are significant investors in infrastructure, including the resilient infrastructures that communities are going to need to address increasing natural catastrophes. So I think the global insurers and reinsurers often bring best practices in all these areas to a particular market. And that helps improve the resilience of the whole country, as well as develop the local insurance market through the expertise that global groups bring. Natural catastrophes are challenging underwriting to continually evolve. So you really need the technology and expertise to adapt to new realities more quickly than we did a decade or 2 decades ago. And new products and new underwriting solutions need to be able to be developed. And I'd also note there are nonlinear effects at play here. For example, we should ask ourselves, what's the correlation between more frequent floods and the economic activity in a given region? All of these types of changes can make underwriting more complex and require more underwriting expertise and global best practices. So I think that the expertise of global insurance groups is needed in that regard. Why don't I leave it there? I know I'm pressing against my time here, but it's a terrific topic, and thank you again.
No, Stephen, I think it's very interesting. I think the comment that you made, that is something which I want to again repeat that, because it's very important, that areas which had natural catastrophic losses and where the insurance penetration was very good, the economic activity was much better and the economic growth was much higher in those areas. So an area which is not insured well and has a catastrophic event, they actually become poorer, and an area which has been insured well actually become richer after the event. I think it's very interesting, and when you hear it, it looks very strange as to how this can happen, But the reality is it creates employment, it creates investment happening in infrastructure, rebuilding homes and all. And that's why US with a penetration of over 95% in home insurance and India with a penetration of less than 1% in home insurance, there's a huge effort to be done both by the government, regulator, and the industry to bridge this gap, because it makes a huge difference to the economic growth of the place where a catastrophe has happened. So you raised a very, very important point, Stephen. Thank you for bringing it out. And from here, I'd like to move on to the next panelist, Vishakha. She is the MD and CEO of India-U.S. Life. And one more thing about her, she has been the top 50 of India's most powerful women in business by Fortune. And I request her to speak, since we are on the regulatory aspect of it. What do you think, Vishakha, are the suggestions that you have for regulatory changes to further facilitate the collaboration between the Indian and the US insurance industry? Over to you, Vishakha. And we also know you are a very important PE from US investing in your business here in India. So we'd like to hear from you. Vishakha, over to you.
Thank you, Tapan. I didn't bargain for Mr. Panda to be sitting through the meeting, and so it's interesting to be able to speak directly from that perspective. But I think I'm just going to add, Mr. Panda, to what you said in terms of the list of investors. Because of the regulations having been opened up in India, where we allow foreign investors to PE investors to directly invest in India, that list of companies need not just be restricted to insurance companies. It can actually extend across PEs. Perhaps there is one point that we might want to consider within our own regulations of the Indian SPV regulation that we have for foreign PEs when they want to invest in a company beyond 10%, because that kind of creates additional regulatory approvals, administrative complexity, and actually a lack of parity between different classes of investors. So if we manage to create that parity, we won't just have insurance companies that can actually come in, but we'll have a lot of PEs who should be able to come in and invest too. And the returns chart that you showed make a very compelling proposition for PEs to invest. And why is it that is important now at this stage? Because I think while we could have said at the early start that we needed strategic investors because we needed to bring in some amount of knowledge into the country, now that we are about 22 years old, most of the companies that we run, based on product regulations, based on science, we are actually mature enough to be able to give Indian knowledge and Indian expertise to the product development. So that the requirement is not necessarily only that of strategic investors, but it could also be that of private equity investors. The second point that I wanted to make was in terms of tying up for very specific requirements. For instance, and the point that you were making, Tapan, in terms of how the home insurance, the tax benefits directly kind of correlate to the penetration. So, for instance, I know that US in specific has policies where the health savings account are attached to a debit card, and the spends that are made through those debit cards from the health savings account are tax-free. That directly encourages people to create health savings account, which can be used for OPD, which can be used for treatment, which is a win-win situation across the customers, the insurance companies, and the revenue. That would be, now can we do that kind of a collaboration only for that product specific, only to get that idea, rather than having to need an investor coming in as a shareholder for us to be able to get that idea? So some of these kind of innovative strategic partnerships, if can be allowed across borders, would be interesting. For instance, since we had LNG as our partner earlier, I speaking from that experience, we have insurance companies which are the largest real estate owners in terms of student housing and in terms of senior living. What is it that we can learn from those markets which have provided annuity for far longer, especially when annuity is an emerging need in India, with pensions having been stopped only for the past about 15 to 20 years. And so the generation of non-pensionable population really, which will be increasing in 5 years from now. Whereas we've seen that non-pensionable generation in other markets, in other mature markets. So what are the learnings that we can get from that specifically? So again, we may not need investors for a sharing of information, for creation of products, for creation of processes, and can we actually explore strategic partnerships across, and not necessarily only think of partnerships through shareholding. That was just one of the thoughts that I wanted to present, which will actually address investments, product development, process enhancements, and ideas for penetration.
Thank you, Vishaka. Let me tell you a small interesting story, because you spoke about the PE investment. About 3 days back, I was in your city, and quite a few PEs approached me, and they said, "We are amazed at the current regulator that we have." I said, "Why are you amazed?" Well, it's people from the regulators reach out to us to understand how they can look at PE investing more. So there's something happening. I do not know. Mr. Panda is there. I don't want to take away the thunder if something is happening, but this is what I heard from the PEs directly. So I think one of your concerns is already getting addressed, which I can see from the market what's happening. Second part on your health saving, I think that's very critical country. I think what you mentioned very right, or the life part you mentioned, I think very, very relevant points which has been raised by you. And as we are already on this topic, but before I move on to my next participant, can I request all those participants who are listening in, if they want me to ask some question or no, to the panelists that we have, please type in a question in the chat box so I can take up some from there also and pick it from there. But since we're on regulations and changes here, I'd like to move on to my next panelist, Kimberly Clement, who is the Vice President for International Public Affairs, Liberty Mutual. And I think Liberty has done a lot of work on tech and the way they have been trying to move forward. And I actually went to their office in the US also and met quite a few of them there. The question I have for you, Kimberly, is that governments are developing policy in complex areas such as privacy, security, digital technology, and climate that affect all sectors of the economy. How is the insurance sector utilizing digital technology, and what are some of the advancements, and how can IRDAI work with US companies on policy objectives in this area? So, Kimberly, over to you.
Thank you. Thank you very much. And I want to echo the comments of earlier presenters in thanking the embassy, the ambassador, and you, Mr. Chairman, of hosting this event today, allowing us to speak directly to you. Liberty Mutual is the 6th largest property casualty insurance company globally. We operate in 29 countries and in India as Liberty General Insurance. We're looking forward to building on our commitment to the Indian market. To the question, we know that technology will play an increasingly important role over the next decade. And Liberty supports a liberalized marketplace where players can bring its best innovation and sophistication in pricing, analytics, claims to the marketplace. We recognize that governments, including insurance regulators, are seeking to ensure that the use of big data and artificial intelligence and machine learning are consistent with policy objectives related to consumer protection and risk management. And we want to work with you in this area to ensure that we're able to deploy the best of the best technologies and capabilities to grow the Indian market. I appreciate the comments that you made earlier, Mr. Chairman, on ensuring the scope for innovation and competition that supports consumer choice and financial inclusions. Insurers are investing heavily in technology to drive efficiency and speed turnaround time. And given the youthful makeup of markets in the Indo-Pacific, it's especially important to be able to sell and manage policies digitally for both customers and agents. And besides technologies, use of advanced analytics also play a key role here, not only for improving sophistication and granularity of data and reports for decision-making, but also, as we've seen for several years, for predicting and improving efficiency in claims fraud detection. Like other insurers, Liberty has set up innovation labs. We have 3 of them now globally. And this is where we are developing our new product offerings. And so we appreciate the remarks you made earlier about the use and file system, as well as offering sandboxes to maybe deploy some of these new technologies. I want to spend just a few minutes speaking about artificial intelligence. It's one area where we've seen regulators really looking at, to make sure that, there's not discrimination when deploying AI. And that, again, consumers are protected, and also that they meet the financial inclusion objectives. So we're thinking, we believe that AI will be a very impactful technology over the next decade. The insurance business model is based on an extensive use of data and algorithms, as you know, And insurers have been using AI to improve customer service, increase efficiency, and to fight against fraud, as I mentioned. We are using AI in several of our tools, including to better manage the claims process from the first notice of loss through settlement in a fully paperless environment. Digital claims reporting capabilities through dedicated apps or integrated into the social media platforms, offering more options to customers. Computer vision, where AI can interpret images or video, has applications across claims and underwriting. Remote photo and video appraisers account for almost 60% of total across our Asia markets at Liberty. And we are testing other related technologies, as you may be aware, in China and in India. And so we appreciate those opportunities to do that. What's great about these technologies is once they're developed, they can be easily ported around. And so again, we appreciate the idea of using the sandbox and other opportunities to test these out. I wanted to mention AI in particular because one of the misconceptions that we've seen in other markets recently is around considering regulation of AI is concerns around using AI to narrow access for insurance. There seems to be a conflating of all subsectors of financial services. So where insurance is different from banking, for example, is in the area where banking is focused on credit worthiness. Companies like Liberty are using AI, using telematics to actually expand the availability of insurance and to get the prices down of the insurance that's available. And so we'd like to encourage, to the extent that when you're looking at these new and innovative areas and new technologies, we want to work with you so that we can share our experience on the outcomes of utilizing AI. And we want to engage in that robust policy conversation with you and really think about what are the best digital capabilities, to meet your policy goals, whether in financial inclusion, consumer protection, and ensuring that we are taking care of risk management. Thank you very much.
Thank you, Kimberly. I don't think you could have made a greater pitch for our chairman here. He's so interested and keen on tech. He's already held a couple of hackathons. I think I never saw a regulator do that. He's already got the InsurTechs on, and you'd also be happy to know the kind of InsurTech collaboration already happening with the US market in terms of the amount of investment happening, and over 150 InsurTechs already working very strongly in the Indian market. And not only from a pure AI use, I think the insurance industry as a whole across the world is opening up for ecosystems now. From being a pure product driven to a specific thing to solution providing from a customer perspective. So tech ecosystem creation, expansion of the role insurance companies will play in providing solutions to consumers because of this tech. I think it's developing to a very exciting space. So a lot of activities is going to happen here. I'm so happy to hear from your viewpoint in terms of AI, the development which Liberty is doing, and your willingness to look at the Indian market in terms of putting it together. And since we are on the tech part, I'll move on to my next panelist, Ajay, who is the head of distribution for Asia MetLife. Ajay, may I ask you how life insurance industry is using newest technologies and tools in various aspects of their business now?
Thank you so much for giving me this opportunity. I'll just start with, it's actually a matter of pride to be in this discussion. And Mr. Panda, your vision and what you laid out was something we are hoping for. For me, who's born in India, started my career with the Indian Armed Forces, and being part of many events, to see this growth is absolutely a pride moment for me personally. When you look at technology in the life insurance space, I think there's an element of from insurance underwriting or insurance preventions to moving into a behavioral mindset of how do you use in the life insurance space technology and the ecosystem, I think, which you talked about, so that people live healthier and they live longer. So I think there needs to be a mindset shift happening, and it's still in the nascent stages in many countries, where you start underwriting not just once, but on a more behavioral and an ongoing basis. And today we have wearables, we have different kinds of devices where you can actually, just like I think Kimberly was talking about in PNC space, you can actually track behaviors of how you drive. You can even track behaviors of how do you live. And I think the dream would be, if I take an example, today if we underwrite once and we say, okay, I've underwritten you based on historical factors and some of the other behavioral elements, which are very minute as to how long do you smoke or don't smoke, and some of those questions to say, how do you really live your life? And can you get into a world of continuous underwriting in the sense of, yes, you might have diabetes, but you wear a level wearable. And if you wear a level wearable, we can track you using data to say how you're really behaving. And you probably would have a probability of living much longer than someone which at an instance of 30 years of age when taking a life insurance policy might be healthy, but has a very different, day-to-day behavioral pattern. So I think the holy grail is using life insurance and using the merger of these technologies and real-time data to firstly to understand how people live, but also then to nudge them to live in a better way. And I think that's the direction. That's the direction I think where if we go, we'll be in a much better position. So I think, sorry if I don't know if I answered the question which you asked, right? And if there's any other thoughts.
No, it's just perfectly fine, and you really answered it pretty well. And I think as I move forward, I have one question from Shantanu on Indian insurance. I'll take your question, Shantanu, and I request other participants also, if they want to put in more questions, please go ahead. But I have an interesting question for Brad, because I think we will run short of time otherwise. So let me take, I have so many questions for all of you, but let's take this one for Brad. Brad, this is for you. India will take over the presidency of the G20 this November. I understand both APCIA and ACLI have participated in the G20 business advisory process in past years. Can you outline some of the ways insurance has been linked to economic growth and development? One, India is taking over from the 2022 Indonesia presidency. Can you also outline plans for the Bali Insurance Summit in October?
Sure, thank you. I'll be brief. The G20 has been empowered since the financial crisis to coordinate global efforts to avoid financial crises, and both mitigate but also prevent future ones. And as such, it's become the body that oversees standard setting bodies. So for insurance regulation, it's the International Association of Insurance Supervisors. Then they are coordinated by the Financial Stability Board, which is directed politically by the G20. I would reiterate the word excitement. India is going to be president next year after Indonesia, which has been the president for 2022. The handover takes place in November. There has been a great deal of work under the finance and economic track, which is made up of central bank governors and finance ministers, looking at a number of issues. And I'll just highlight the ones that the Indonesian are highlighting for this year, and it's improve access to affordable and sustainable funding sources of funding. Now, these are very broad economic recommendations at a macroeconomic level, but they include insurance specifics. And it's basically insurance companies are very good generators of long-term investment, long duration assets because of their risk liability matching. And insurance, it can be used also retirement, so pension products. The recommendations currently are to expand access to those products in the markets through financial inclusion, through other government policies that have been highlighted by the G20 over the years. But it's basically to try and use the insurance industry as an economic driver. So it's more than just meeting consumer demands. It's taking a second virtuous benefit of creating and of building the insurance industry to also create a long-term investment market. And I just would point out, I believe maybe our government colleague can mention some of the work between the U.S. Treasury Department and the government of India on local and municipal bond investment, and how it can be promoted as a source of long-term investment. The other emphasis of the Indonesian presidency, and I would point out, Indonesia has been the first emerging market, developing country in the last few years to be the president of the G20. Last year was Italy, so there were a different set of focuses. India is looking at a developed how to increase insurance penetration. They have topics on microinsurance. They've actually set up a separate work program on financial inclusion and access to insurance under the G20, and the Business Advisory Council, which we trust India will be taking over in 2023, has been in existence since 2011 when it was set up under the Korean presidency. And they tend to be the recommendations by the business community about how, in this case, globally, insurance companies can contribute to not only economic development and growth, but raising insurance penetration and what is more specifically known as access to insurance. And there are a number of countries that are leaders on that. India is one of them. ACLI and our members have participated in these because we usually find we can work with local partners that have the same commitment to increasing the benefits of private risk protection products. And I just would say the Indonesian industry is going to be hosting an event in Bali on October 17th and 18th, where they will be focusing on the Indonesian examples of what their objectives for their G20 presidency are. I would also, point out that India will be the middle in 3 emerging markets, with Brazil taking over the presidency in 2024. So I think it's very exciting, all of the regulatory paradigm shift and dialogue that IRDAI has established. This represents a very good synergy between, you mentioned India is the world's in the top 10 life insurance markets, but it's obviously it will be the world's largest population. And life insurance goes on population demographics. And all the reasons you emphasize about growing middle class, there can be mutual benefits as those people start saving for retirement, as they save for their children's education. It doesn't all have to be risk protection, it's also capital formation. So I just want to mention that this includes more than just insurance. It's a macroeconomic of which we are part of a broader financial services industry. But we're particularly poignant as banks try and de-risk, and they look for insurance companies to take on more long-term liability asset matching. Thank you.
Thank you, Brad. I think very, very informative of all that you mentioned about it. And I think the point that you mentioned, and exactly what I mentioned, though it may be the top 10 right now, but the potential to become the largest is very, very clearly evident. And if you see the momentum moving forward and the way things are happening, it's clearly there. And when you talk of economies also, we normally talk of all that is done to take the economy to the next level, like $5 trillion, as Mr. Panda mentioned, or what has been done. But what you forget is the insurance industry protects the downside. You can't have a leaking bucket in which you keep on talking about the upside of the economy and don't put the downside, then you never take it to the 5 trillion or the 10 or 20 or $30 trillion economy you're talking about. And that's exactly the point that you mentioned, Brad, that how do you plug it together to ensure that we can reach there. And as I see all the directions being taken in the right direction. I'm conscious of time. We're at 8:35 Indian time and we'll finish at 9, and we have 3 interesting speakers coming in now. So I request my panelists to wait. We have some questions coming in. We'll come back again, and if we have some questions from the audience, we'll try and take that. But from here, I'd like to move on to a very interesting speaker from the government, Mr. Saurabh Mishra. He has been part of the industry himself, and now currently he is the Joint Secretary, Minister of Finance, Department of Financial Services, and he's there. So he understands insurance. Now he's part of government. He understands the regulations. He understands the changes to happen. So it's very interesting to hear from him as to what he sees as the new policies and recent insurance reforms in India. So over to you, Mr. Saurabh Mishra, to hear from you on these points.
Thank you so much, Mr. Singhal, and a warm welcome to all the participants and the panelists out here. Let me just try and put across my presentation here to just take you through on the way I'm thinking through to talk this few minutes out. So the idea here is that I'll try and cover up some of the new policies as well as the reforms recent or in the realm of the legislative framework of the insurance sector the way we've gone about. So there are 2 or 3 headline things with which the insurance sector in India is defined. One of the foremost is the Insurance Act 1938, which was created for the efficient functioning of the insurance companies as well as the insurance sector. Then came IRDAI 1999, which was the start of the regulation in the country from a regulatory perspective. Prior to that, it was the controller of insurance who used to operate it out for the insurance sector. And this started off right from 1938, post the independence and so on, till the emergence of the regulator took place. The other 2 acts which support the sector in terms of creating a line of the legislation is the 2 Nationalization Act. One is towards the life insurance side, known as LIC Act 1956, and the General Insurance Business Nationalization Act 1972, which defined the general insurance of the non-life businesses of India, including the reinsurance. Starting from the reforms perspective, I think some of the things which happened after the regulator took charge was the private sector participation and the influx of foreign direct investment. And that's where the entire landscape began to change from a nationalistic insurance scenario to a more private sector oriented, multinational oriented, and so on set of players emerging. And at the same time, public sector insurers continued to exist and to a large extent dominate the sector. With regard to the life insurance, around 2/3 of it, and with regard to general insurance, around 1/3 of it. 26% in 2000, 49% in 2015, and 74% in 2021. So these are kind of the pointers or landmarks with which the entire journey has remained visible and active with regard to the Indian insurance sector. With 2000, private players were allowed, FDI was allowed. In 2015, foreign reinsurance branches were allowed to set up their offices in India. And in the 2021, when we took up the legislative reform of bringing in the FDI limit from 49 to 74%, we also took away the clause which was Indian owned and controlled, which means that basically capital will be treated as a capital, regardless of it being domestic or foreign, regardless of it being public sector or the private sector. So that's how the broad parity on capital side came through, and therefore ushering in one of the important eras of inviting the capital without any bounds and without any disparities. In 2019, we also had 100% FDI that was allowed to the insurance intermediaries through the change in the rules which we had done. In 2021 itself, FDI for LIC, which is a body corporate, was opened up for 20%, and also the enablement of IPO was conceptualized through the legislative route, which was the finance bill. And in the 2021 itself, the private sector participation was allowed into the general insurance public sector as well. So quite a busy plate for us in the last few years with regard to the sector level reforms and with regard to opening up, not in terms of just the ease of bringing in the insurance to the common folds of India, but also in terms of ease of doing business, both on the sector side as well as the policyholder side. The reforms also continued in some other forms. For example, one of the important things that we've been really watching out is the gradual reduction in the obligatory cession limits, which started off as high as 20% in the year 2006, which stands now at 4%. And there is clearly a well-held view that we have to clearly look at taking it down to a level which is minuscule or negligible. So that's one thing that we've been doing with regard to the reinsurance market side whenever any session has to happen on the obligatory basis or mandatory basis for the country. I already spoke about the emergence of FRBs, and as we speak, that forms quite a significant size of the overall reinsurance market in India. And if my number serves me right from the memory, it is around 40% businesses, which is already being secured by the foreign reinsurance branches. And mind you, we have yet to unleash the reinsurance potential in India in terms of its abilities as well as in terms of its capacities. So that's the journey point for the foreign reinsurance branches. As we speak, friends, IFSC is defining itself through the IFSC insurance offices, through the act, which was IFSC Act in 2019. And there is quite a lot of active interest which is coming up both from the investors and insurers in that regard. IFSC, incidentally, when we set up the insurance offices within the IFSC, it doesn't even differentiate between the insurer, different classes of that, or even the insurance and the insurances. So it's quite a open format thing with which we have set up the IFSC insurance offices on the legislative side of the Indian overall insurance sector. Regulator is picking up the mental right from the front, and more so, especially in the last few months, that we've been seeing a tremendous amount of change after the new chairperson taking it over. Regulatory sandbox is getting spruced up again. Standard insurance product, which were a tremendously important ask as well as the need for the country when COVID occurred to us as well as the globe. So I think that is, on one hand, is promoting innovation. On the other, it is promoting simplicity and hence the policyholder protection. The two flagship schemes, which started off 2015 for life and for accidental health, called Pradhan Mantri Jeevan Jyoti Bima Yojana, and which stands for the life, has been creating some wonderful level of penetration and coverage landmarks for us. As we speak, the enrollment has already crossed over 294 million for PM Suraksha Bima, or the accidental insurance, and 133 million for the Jeevan Jyoti, that is the life insurance. And can't agree more with both Brad and Mr. Singhal that these are still the numbers which can go a long way from where we are to where we can be. Given the fact that these are the bottom of the pyramid scheme, one of the important things with the government was to keep the numbers on the premium rate tables as low as possible, as affordable as possible. And as we speak, the two schemes put together are available for enrollment for any Indian, not just the weaker section or otherwise, at rupees 1.25 per day. And that is for a 200,000 odd sum on both sides of life insurance and accidental insurance, respectively. Possibly one of the most affordable scheme and the most voluminous schemes around the globe. COVID reforms also were something which is extremely important for us when we tried to wade it through amidst a tremendous amount of uncertainty and a tremendous amount of emergency that was being faced by the country. Some of the headline things that we could really do at that point was extending the benefit to the families for to the tune of 5 million, which were the health warriors on the COVID deaths, accepting the health insurance premiums in installments for those who are unable to pay, because there was lots of job attritions and job losses and migration of Indian citizens from the metropolitans back to their villages and small cities. And also clearly creating a cashless claim settlement limit of 2 hours, which came from Supreme Court and then was obviously immediately taken up by the regulator and the legislation as well. Thinking about the road ahead, I think much of it is already been kind of coming out in the last 1.5, 2 years, or 2.5, 3 years, if I may just take those two periods, just prior to the COVID or thereafter. There are a few things which are kind of in examination stage as we speak. Can we think about multiple formats of insurers, which could cater to a rural India, which could cater to a regional India, which could cater to a digital India, which could cater to a class or subclass of insurances, which we can think about defining, and then possibly route. All those things are under examination as we speak. Me, my regulator, and my most of the industry CEOs are actively in touch with each other. And by the way, this is possibly this moment of truth for India, when the industry, the sector, the regulator, and the legislative team all are one team in order to get it right, get it better, get it larger, and get it wider. We are trying to provide value-added services for Indian insurers and Indian reinsurers and recognize those incomes in addition to the premium income which they can generate today. We are thinking about multiple utilizations of the branches, touchpoint bank branches, insurance branches, agent networks, all other large networks, which can take insurance to the last available eligible Indian citizen. And that's where possibly apart from the two core familiar ratios of insurance, which is the penetration and the density, I think for India, there is a third ratio called the coverage ratio, which is equally important. And that's where our bottom of the pyramid starts from. Have I covered every Indian is the coverage. Have I covered the Indian in the GDP terms? That is the penetration. And have I covered every Indian adequately is the density. So that's how our kind of a pyramid starts. And possibly for 100 other countries who think or are on the same page like India at this moment. So I think that's how we have been kind of thinking through both through our efforts out here and a liberal collaboration and help from our regulatory colleagues as well. We are committed to make India as a global reinsurance hub, something that we've been doing in insurance. We are not far behind in terms of examining and exploring various possibilities. IFSC is one such possibility that we are very sincere about in terms of exploring whether it can provide whatever it takes in terms of digitality, the efficiencies on tax, efficiencies on real estate, efficiencies on properties, efficiencies on synergy with the other financial services sector, so on through the IFSC route. We are thinking about training and enhancing through creating large risk pools wherever, whenever they are felt as a need, including the current crisis of Ukraine, when we have created a quick fire energy pool with regard to the oil and the related risks. So those are the things which are actively in our radar at the regulator as well as at the DFS level. Connecting to the country, to the industry, to the sector, and wherever required to the reinsurers through our insurance broking colleagues' routes. We are also actively examining and thinking about a P&I club to be activated properly and adequately, both from the insurance perspective as well as from the paraphernalia or the infrastructure which requires to set up a P&I club efficiently. We are also thinking about examining the investment and capital norms for the insurers who are existing or the startups who must be willing to take this on. So this is a broad landscape of the way we have thought, gone ahead, and thinking through in the days to come. I take a pause here. Thank you so much.
Thank you, Mr. Mishra. I think I loved your point on moment of truth, singly being together in terms of the reforms happening, the exciting times ahead, and being a part of the industry. I can't but agree more. I can see it and love every moment of it. So thank you for your talk and the clarity with which you put it forward. From here, I move on to invite Mr. Steve Seitz. Mr. Steve is the Director of Federal Insurance Office in the U.S. Department of the Treasury. FIO monitors all aspects of the insurance industry and develops federal policy on prudential aspects of international insurance matters, including representing the United States, the International Association of Insurance Supervisors. FIO also administers the Terrorism Risk Insurance Program. FIO also authorized to collect and disseminate data information from the insurance industry. So, Mr. Seitz, as you come forward and you speak, may I request you to highlight two things in your talk? First is that what are your objectives for the upcoming bilateral financial services regulatory dialogue? Do you feel financial services level meetings provide adequate chances to build strong regulatory coordination, or should there be greater insurance regulatory bandwidth to discuss insurance specific issues? That's the first question that I want you to cover in your talk. And the second is India and the US are both leaders of the International Association of Insurance Supervisors. Can you highlight areas where you see the US and India having common priorities for international standards development and AIAS implementation? So over to you, Mr. Seitz.
Well, thank you, and hello, everyone. It's my pleasure to participate in today's dialogue with the Joint Secretary to the Government of India and the Ministry of Finance, Saurabh Mishra. I'm happy to address those two questions during the course of my remarks today. As many of you know on this WebEx, in 2019, our office signed a Memorandum of Understanding with the Insurance Regulatory and Development Authority of India, agreeing to mutual cooperation, coordination, and exchange of information to help both of us fulfill our responsibilities and functions. We look forward to continuing our partnership with IRDAI and the other Indian authorities. In fact, the trip by Treasury Deputy Secretary Adiyamo to India this week further underscores the importance of the India-U.S. partnership across a wide range of issues affecting the insurance sector. Today, I'll just provide an update on a few of FIO's priorities and some areas of shared interest between both of our countries. First, beginning with climate, both India and the United States are experiencing troubling increases in both the frequency and severity of climate-related events, such as heat waves, droughts, and erratic rainfall. These events can create or worsen the financial risk for the insurance sector, but at the same time, insurers are also critical to reducing the financial losses from these events and, importantly, supporting communities as they rebuild. FIO sees the climate insurance nexus as a very rich place for the partnership between the US and India to work together. To provide a brief update in FIO's work in this area, in May of last year, President Biden released an executive order that directed our office to examine the potential for disruptions of private insurance coverage in US markets that are particularly vulnerable to climate change impacts. And in response to this executive order, FIO is conducting quantitative analysis of the physical risk of P&C insurers' climate-related exposures from the underwriting, focusing on the homeowner's business line. In the United States, we're already beginning to see anecdotal signs of stress in some insurance markets from climate-related disasters. Some examples in the US include the failure of several insurance companies in the US state of Louisiana since Hurricane Ida, almost a doubling of homeowner policy premiums in Florida's residual market, as well as market withdrawals by insurers in multiple parts of that state. These examples point to climate change as an emerging threat to the stability of insurance markets, which could also portend shocks to the broader financial system. Importantly, as FIO takes our work forward to assess the critical issues around the availability and affordability of insurance, we need to have a comprehensive understanding of the extent of these issues, and that requires both granular and nationwide data to assess these localized impacts and allow for a comprehensive analysis in the US. We're continuing to evaluate the data collection and dissemination authorities that were referenced at the front with respect to the insurance sector, and we're going to figure out how to potentially use those to fill data gaps and standardize data. We see the standardization of climate data and methodologies for the insurance sector as a fruitful area of international cooperation between our sides, as best practices can help reduce climate-related risk at a global level. Another area of active work and priority for FIO relates to cyber risk, and that also includes our administration of the Terrorism Risk Insurance Program. We administer the program, which is a public-private insurance backstop formed in the aftermath of the September 11 terrorist attacks, and that ensures that terrorism risk insurance remains available and affordable in the US. And FIO engages regularly with other nations that have similar mechanisms, including with our colleagues at the General Insurance Corporation of India and the Indian Market Terrorism Risk Insurance Pool. And that's all done through the umbrella organization of the International Forum of Terrorism Risk Reinsurance Pools. And we're looking forward to deepening that relationship in the years ahead, particularly when we look at issues relating to cyber. One example that we've done this year, we revised our TRIP data call to obtain more granular information on cyber insurance in the P&C sector, including ransomware coverage and losses. And we've outlined those results in our recent report to Congress. We're also going to continue assessing and evaluating the cyber insurance market more generally. One area of priority I'd like to highlight is that in June, our Government Accountability Office released a report finding that cyber threats to critical infrastructure presents a significant economic challenge, and that although cyber incident costs are paid in part by the private markets, growing cyber threats have created uncertainty in this evolving cyber market. And I'm sure the same is done in India. We agree with the recommendation that FIO should work with our DHS Cybersecurity and Infrastructure Security Agency to jointly assess the extent to which risk to critical infrastructure from catastrophic cyber incidents and their resulting potential financial exposures could warrant some type of federal backstop. So that's an area we'll be assessing. We're also very well aware of the growth of cyber risk in India and the Indian government's increased focus on educational initiatives to tackle challenges like ransomware and malware from cyber threat actors. We see this as an evolving area of cooperation and exchange of ideas to develop systemic cyber risk mitigation solutions that cut across geographies and affect both of our countries. Turning to the life and retirement sector, both the US and the India have robust life insurance and retirement markets, indicating a strong need in both of our countries for these products as individuals save for retirement. In 2021, the Indian market size by revenue for the life and annuities industry was approximately $995 billion and is expected to grow by 5% this year and continue that growth over the next decade. I'm sure that was mentioned earlier as well. India's insurance industry has over 20 life insurers, and Life Insurance Corporation is the sole public sector company. And the US life and health sector also is doing very well. In 2021, the premiums for this sector were over $800 billion, and insurers held approximately $8.5 trillion in total assets. That's over 2/3 of the U.S. insurance industry's total assets. In our country, we're seeing similar projections of growth for insurance products, market size, and needs for the support of retirement market participants. And this is being done through innovations in business structures, regulatory oversight, and disclosure from new emerging participants in the life insurance space. One issue I would like to flag for this group is that FIO has been tracking the increased presence of the private equity industry in the insurance sector and has highlighted these developments in our recent reports. And we're considering, similar to the prior presentation, how the current regulatory framework may need to be modified so that it continues to enable regulators to safeguard policyholder interests and address potential macroprudential risk. In both India and the United States, the increase in private sector participants is creating a conversation around the potential need for more sophisticated regulatory monitoring frameworks to address emerging risks. In India, due to the move from the Life Insurance Corporation to an increasing mix of public and private players, and in the United States, due to the increase in the private equity-backed insurers. We believe that both the U.S. and India would benefit from increased cooperation to understand the capital and risk management frameworks that are present in both jurisdictions. And this is obviously an area of focus for both of our countries in the joint work we're doing at the IIS, through the capital and solvency work, the insurance capital standard, and the parent committees. I did want to briefly highlight 4 areas that we're focused on in the U.S. with regard to the life insurance sector. First, looking at liquidity concerns and the appropriate regulatory response in view of the transition from traditional asset classes, such as investment-grade bonds, to more traditional non-traditional assets that may be higher yielding, but they're less liquid. This includes real estate, collateralized loan obligations, and other privately structured securities. Second area of focus for us is credit risk and the loss absorbing capacity and the appropriate regulatory responses that need to be done in view of activities in the sector that are now linking together affiliated origination platforms, securitization strategies, and asset allocation approaches. Third, we're also monitoring the growth of offshore reinsurance and assessing why segments of the U.S. market are increasing their reliance on affiliated and unaffiliated reinsurance entities. The migration of interest-sensitive longevity business to a few offshore insurance jurisdictions has significantly increased in the last few years. And then finally, another critical issue is issues relating to potential conflicts of interest arising from some of the approaches and the management and investment fee structures, operating strategies, and some of the sourcing that we're seeing with these businesses. And just trying to assess, how they align with the long-term commitment that's necessary in both of our life and retirement sectors for fulfilling the important obligations for individuals as they save for retirement. And finally, to touch on the question at the front, I do want to just highlight some of our international engagement efforts and areas where we're working together with our Indian colleagues. We've referenced our work at the IF trip with the terrorism risk insurance pools, and then also, as you mentioned, the work at the IIS. We really appreciate the engagement from IRDAI and the IIS parent committees, as well as in issues such as capital and in the resolution working. And I think one area that our team is tracking is, India's planned transition to a risk-based solvency regime. We both are participating in those conversations internationally, and we look forward to further collaboration on those initiatives. We view the opportunity to collaborate with our Indian colleagues on best practices as a great example of the cross-border cooperation for our countries. For example, in prior years, we've had webinars with IRDAI and other authorities on risk-based supervision, and both of our countries are also members of the network of central banks and supervisors for greening the financial system. These are other areas of cooperation for both of our sides. We appreciate the collaboration with India on these and other insurance-related issues, and we look forward to that ongoing cooperation in the years to come. And thank you to this group for the opportunity to discuss FIO's work. And I appreciate the relationship between both of our sides. And I think both of us potentially be happy to answer a few questions as well. Thank you.
Thank you, Mr. Sudhir. That's very comprehensive. I think you laid out the clear roadmap, expectations, collaborations, and what are the expectations going forward. So from here, I think I'll take Shantanu's question because he put in first the question there, and then I'll move on to the next part of the agenda. Shantanu has asked that how are Indian insurance companies preparing for the entry of foreign insurance companies? And second is, what is the market share of the leaders in the insurance industry in India? Shantanu, I think let me put my perspective, since I've been part of this industry for 30 years. Anytime when you have a lot of players into the market, it's very, very exciting. One, from a consumer perspective, the benefit to the consumer is huge. Innovations happen, margins improve, customer gets very good product, very good experiences, and that's how it takes it to the very next level. So I think the more the merrier is what I've always mentioned, and that has been seen if I look at in the past 21 years when we had JVs come into the Indian market. We had Allianz, AIG, MetLife, all the big companies come in. The way the industry changed about that is something which is very, very interesting. And in terms of market share, if you look at, India has always provided a fair play to every insurer. And that's why if you look at some of the leading insurance companies in the world in the Indian market, they hold a pretty big market share. They're already among the leading company. If you look at be it Allianz or be it AIG, they've already moved up as among the top insurance company in the Indian market. So it shows that India provides a very fair play to everybody. It allows an opportunity for them to become among the biggest and the best in the shortest possible time. And it also shows that India is very, very open to the more the merrier, because it's good for the consumer, it's good for the country, it's good for both the countries. So the countries come in also with a learning. Our country like India replicated like large volumes, low ticket size, low margins. How do you play on to build a business model is something which again a lot of people take away from here. So it's a very interesting collaboration which happens. So to answer your question, very exciting times, and I think it's good for both the countries which collaborate together to create this. With this, I think since we are already at 9 o'clock now, I'd request Dr. Ravi Kota, who is the head of the economic wing of the Indian Embassy in Washington, D.C. He deals with finance, monetary investment issues of India and the U.S. He focuses on India-U.S. economic relations and India's investment climate. Apart from handling bilateral economic and finance issues with the U.S. administration, he also deals with issues related to the World Bank and IMF. He also looks after the U.S.-India Clean Energy and Climate Protection 2030. I request him for his thought process, concluding remarks, and word of thanks. So over to you, Dr. Ravi Kota.
Thanks, everyone. It's already, we are crossing 11:30 EST and also 9 p.m. there in India. And I don't want to take more time, but quickly, I wanted to say three things. First is that this is a great occasion for India and US, as was brought out, 75 years of India's independence celebration, 75 years of India-US diplomatic relations. Now, at this point of time, as brought out by all the stakeholders, three key stakeholders, as our colleague from DFS, Mr. Mishra, brought out, the policy leaders, regulatory leaders, and the industry leaders. All three are working in tandem in the insurance sector. And as our chairman, IRDAI, pointed out, the sector is at the inflection point. Now, all these three also have come together within the US-India kind of a partnership, economic partnership in the broader framework today, and spent 2 hours. In fact, when we were planning, we wanted to have IFSC also one kind of a session, but we were exceeding. It's already 2. Initially, we thought of 90 minutes and it has gone to now 120 minutes. And despite of that, our chairman, IRDAI, has been sitting all through, and we are really grateful to him. And three key takeaways from this interaction, perhaps one is that now everyone is on the same page, the kind of potential insurance sector in India has. Second thing is that the kind of a proactive, and it's no more rule-based kind of regulatory framework. It's a principle-based, and there are some of the examples as highlighted in the presentation of Chairman IRDAI. It clearly brings out industry and regulatory authorities, both of them working in tandem and putting the industry in the most of the cases perhaps in the driver's seat when there's some of the examples of the streamlined product approvals like use and file instead of file and use. These kind of things really brings out how proactive our regulatory leadership has taken in the recent past. And lastly, within these two things, US and India together at the government level and also at the industry level, how best we can work together is something all the participants who are present here, they spoke. So we are here in the embassy and our teams, and we would be very happy to work with the US industry. And we have our good friends Brad and Steve from APCII and ACLI, and also our US side. Stephen is there, and in fact, we have been working very closely for the next US-India finance regulatory dialogue. And so we will be very happy to work with and take the all kind of proactive steps so that the best partnership we can put in forth. And as our Prime Minister Modi talks about next 25 years, India, the vision of India, and in fact, now today, our chairman also highlighted that now vision for insurance sector for 2047 is insurance for all. That's the one of the three elements of the insurance sector. That's a coverage part is very much there. So therefore, we look forward and thank you everyone, and thank in fact our chairman Mr. Debashish Panda and his team, and for his time and also guidance. And our ambassador has been very keen. We are organizing with a series of events as part of the 75 years of independence. And CII leadership, Mr. Chandrajit Bose and Mr. Sanjeev Bajaj, Mr. Tapan Singhal, and Shuchita in US and her team, they have been wonderful partners. We have been working together. And also the kind of a seamless panel conduct driven by Mr. Tapan Singhal with members Brad, Steve, Vishaka, Kimberly, Mr. Ajay Singh, and thank you all. And also I thank our Joint Secretary, Mr. Saurabh Mishra, and also yes, FIO's Director Stephen Sage for his time. And looking forward to work with you all. Thank you so much.
Thank you, Ravi.
So much.
Thank you. Thank you, everybody. Thank you to all those who joined in to listen to this. And with this, we end the session. Thank you very much.
Thank you. Thank you. Have a nice day. Thank you.
Thank you.
Have a good evening.